Hello, Warriors. How's everyone doing today? Middle
Good
East.
morning, Coach.
Good morning, Blake. Middle East getting a little messier. People are demonstrating in different countries and gathering in front of U.S. embassies. How are you doing?
Didn't Biden travel to the Middle East? And I thought like a lot of those meetings got like called off.
Abbas, after the hospital got hit, Abbas canceled his meeting with Biden.
The Baptist hospital.
It was a Baptist hospital.
It was,
yeah.
Interesting.
So good morning, Blake and Mark and Jamie and Marty. Welcome to F.A.C.E. Are you new? AJ, Greg Herbert, seeing some different names. Hi, Bran, Ryan. Hi, Scott. How are you, Shooter? Paul Penman. Anyway, I feel there used to be a show when I was a kid where I forgot the name. Romper Room. Yeah, that was it. And she was able to see everybody and knew if they were home sick from school. So anyway, gold surging again, silver surging again. I wouldn't chase leverage investments. You know what? I think the big story is what's going to happen when stocks like this really begin to cave. And this is NVIDIA. And I was talking about maybe a right shoulder here. That was before this. This was on the export restriction of chips. Anyway, it's a poster child for AI. So AI is better than natural ignorance. Yeah, that's going to hurt. Yeah. And it's going to affect sentiment, Brand, on, semiconductors for sure.
Yeah, let's not forget we have Tesla and Netflix reporting after hours today. So
yeah, Tesla is a cult stock too. And it really hasn't rallied well with other things. So we've made a couple of lower highs here, called a little lower. So, but with earnings, anything could happen. But I'm hearing that their earnings may not be that great.
It's interesting. I was just watching something over the weekend, a special on EVs and how demand is completely just kind of flopped on its head from like a year ago. And Tesla's done this like aggressive
pricing,
price cut. Yeah, and it's great for Tesla as far as like attracting business. They're just undercutting everybody. It's really making it tough for other buyers, but really EV vehicles have become really out of favor over the last, like there's been a real shift in sentiment, and I don't get why, but anyway, yeah, Tesla is going to be an interesting one to watch today, I think. So,
yeah, I mean, the whole board is, so let me get to the guys. Good morning, Ryan. How are you, buddy?
Morning, mate. You all right?
Doing okay here. I want to show you something.
Oh,
look, the spaghetti indicator is off the charts. I know you miss it. You miss it.
That was our ideal indicator. We were going to sell that for millions now. Millions.
$1 million. So anyway, what's your feel with what's happening in FX? It's really kind of been, quiet comparatively, volatility. Yeah.
It's weird when FX market is the calm head among markets and the bond market isn't. Usually it's the other way around, but very, very calm, very tight. I think there's a lot of pull and push, all this risk stuff. The absolute risk markets at the moment seem to be gold, precious metals and oil. They seem to be reacting the most. FX, it doesn't know which way it wants to turn. Did it buy a dollar on risk? Did it buy yen? And at the moment, it's doing that Homer Simpson, just spinning around on the floor, going nowhere.
I did notice you bring up yields, and I did notice something. The 10-year is at these double tops. I don't know if we took it at 488. So we miss it by a bip or so, but TLT held the prior low by a lot. Now I still think it's going to make a new low here, but it's going to have a pretty nice divergence. So I think the bonds need a risk off move in the market to really gain a bid. I think there's going to be, what we have is really interesting. We have differentiation in markets. Remember, it's been all one market forever.
Yeah.
You didn't see, you didn't see gold and silver up with the market moving sideways or going lower, or the dollar's still going up and the metals exploding like this. So it's almost like there really are different asset classes for the first time in a long time.
Yeah, I think we were talking about this on the flow show. Flows have probably eased up. There's probably a bit of money just sitting on the sidelines, doesn't want to commit with all these headlines banging around. It's the same thing. Whenever you get these risk events, people go risk averse and they take their money off the table and they stick it under the mattress and say, right, we'll come back when things have calmed down. So I think that's probably
they're going to wait a long time.
Yeah, that's the upside risk. If things turn positive, if there's resolutions, if things don't unfold in a negative manner, we're going to see a big, huge run into back into risk. But at the meantime,
and what if they get worse?
Or if they get worse, then we're going to see more. We're going to see more. We're going to see gold. Probably through 2000. People might finally get oil at $100, and that's the risk. So we've still got, it's still ticking over. We're not quite yet ready to put it in the Ukraine basket where, okay, something's happening. It's not spreading. It's contained in its own bubble, and then the market forgets about it. This, there's threats of Hamas with Hezbollah, and if they come into it, that brings Iran into it. You've got the US with military and navy, and the UK with
you have a couple of carriers there.
Yeah. Not that we got anything on them. They might as well be cardboard cutouts for what it's worth.
If I looked at this chart and I didn't know what it was, and I wasn't aware of a war, I'd say this is a nice little rally to sell after this first break.
Yeah.
So the market's not expecting this to, I guess, spread. At least to Iran for now, because that's a reason why people think we could see 300. One of our guests, Thomas Malinan, said if there's a problem in the Straits of Hormuz and there's military action, that WTI will be 300. So anyway, that's I don't want to be the doomsayer, so I'm going to hand it over to the most positive guy on our team.
That make a change.
Yeah. I'm going to, and that's going to be Kman, who always is. It would be a change. You know what? Everything is great. Anyway, Kman, what are you thinking?
Good morning, Good morning, everybody. I really appreciate that you called me the always positive man.
You're the most positive guy on the team.
Really?
Yeah.
Yeah, well, for as long as there's money around in this world.
Ryan's pretty positive. Blake's pretty positive. I'm negative, Ned. So what are you thinking here?
Well,
thoughts? Someone once asked me, Dale, what do you think? You get so tired of answering that. I just said, I think thoughts. All right, go ahead.
I think we're trading relative ranges. Has to be said that the dollar is not really fulfilling its promise as the real safe haven. Other stuff is doing it.
Good point. Yeah.
Gold and but it can still come. It's for the time being we're trading ranges, and I reckon we have to continue to do it until we break those ranges. And there is this I mean, if you look at that, it's a range, right? It's a range. We can't get out of it. And if you look at the euro dollar, you do the same. It's 104.80, 106.5 on the wide. and that's it for now. And for as long as we're in there, we as retail traders should not start to look for stuff that isn't there. If you want to really trade risk, it's better doing metals or better doing emerging markets. And what I also do notice that, and that's again a confirmation of FX shrugging off data or other thoughts right now is that dollar CNH on better Chinese data is unable to come off for 20 minutes. And yeah, so the market is definitely either trading something else or the big accounts are just on the sides. And I'm starting to really think that may be the thing right now. They are taking care of their bonds, they are taking care of their metals, and the rest is stuff for later. So maybe FX will still come, or we are going to mooch around in those ranges for a bit longer.
So here's a question for you guys then. You know, I'm just sort of coming onto this thought, you know, maybe the dollar isn't seeing the flows because they've got two ships parked outside of in the sea off the Middle East, and Biden's over there. And if, you know, it kicks off, they may have to get involved with Iran. If that's the case, where is the safe play? You know, outside of oil and gold, what is the safe currency on that? Swiss yen?
Only there. Yeah,
you're not going to go into a dollar if there's a war.
One of those you can't really bank on it right now because I mean the most it moves is 10-15 points, barring some algo blips.
You know, this dollar stuff, guys. What do you think? Technically, I mean, I think this was the CPI that, you know, was this Friday when the dollar, really firmed up.
It's just corrective.
Yeah, doesn't it look that way, Blake?
It's just corrective. That's it.
So we get over 106.40. We make a run at I think Greg is talking 108.
Yeah. You know, Ryan, you asked what's the safe haven? I think you just said it. It's gold. I mean, I don't see why the dollar wouldn't be the safe haven though in a you know, escalated situation. But do you think it won't be because of US's involvement?
Yeah, well, that's a possibility. I would say that the market is saying like, okay, we don't really want to buy dollars because if the US is really getting involved, it may not be that good for the dollar, short term anyway.
Yeah, maybe short term, but I don't know. I wouldn't take that bet. Me personally, just based on, you know, being through conflicts, you know, over the years, the dollar always, and maybe this time's different because you can always say this time is going to be different, or this time is different, maybe. But I don't think I've ever seen the dollar not respond, you know, in a conflict situation. So
I'd be careful if you're long silver leveraged. You know, if you bought physical, who cares? Right, but
silver just hit the 618, Dale. Yeah.
Okay, there you go. And the, you know, divergences on multiple time frames. It's been one hell of a move, and you know, I keep coming back to this, and you know, maybe it's going to keep me out of the biggest bull market in silver in the history of mankind. But the fact that silver, when we made lows confirmed, makes me suspicious of this move here. So we'll see. You know, we start clearing today's highs and there's a lot of open space, but it just feels like we could be getting near at least a correction, at least a pullback, right?
Well, you just pointed out on your screen the 618 retracement of the last drop. So that would be the move from 25 to basically 20.
Oh, that was the full moon high.
Was that the full moon high?
That was it.
Oh, you know, Dale, I forgot to even ask it. Did you guys see this in the UK? Did you guys see the did you guys have the eclipse?
I didn't notice it. No, but I know
Ryan Kman, did you guys have that on Saturday? Was it visible to you?
Cloudy.
No, it brushed off Europe. It wasn't interested in going there.
Oh,
It was, but you know, parts of California and Arizona.
Oh yeah, it was the weirdest thing.
I don't think we get one till about 2030 something.
Dude, it was so weird. I didn't even know it was coming. Because I unfortunately I don't pay attention to all that stuff. It was like bright. I mean, like there was not a cloud in the sky. And I mean, usually days like that, it's scorching in the desert, and it was like it was hazy. It was so weird, so weird. Anyway, so
Yeah, I mean, I went out and I didn't notice. You know, I talked to other people; they noticed. So maybe it's because I was into the games, college football games. So, I don't know, Blake. You want to take the screen and
sure.
treat people to some setups?
I first of all, I think it's a very, very wise decision for you to bring the attention to silver. The reason why I say that is we did hit the 618, we hit the 200 DMA. You can see it on your charts too. You know, so I think it's, you know, if you're long and you took advantage of being on the long side, especially over the last 24 hours with the break higher and gold, you know, the break higher and silver through the trend line, you know, this is obviously we're getting into some pretty big resistance here. But I wanted to ask the guys, first of all, we had all this Chinese data that came out overnight. It really has been supportive of the Aussie. The Aussie's been, you know, holding up. We actually just hit, speaking of 618 retracements, we just hit the 618 retracement, top of the resistance zone. So you have all this, you know, the China data was good, but you know, you can see most of it came in, you know, above expectations. Retail sales is nice. Even Xi came out and said he's curbing restrictions on foreign manufacturing investment. You can read it right here. But then Country Garden didn't make a payment, and they're at risk of another default. So what do you guys think about the news that's outside of China? Because they've done a lot of supporting of the U.S. economy, or the U.S. economy. I'm sorry, that came out didn't come out the way it was supposed to. Anyway, they've done a lot of support of the Chinese economy. I'm sure it's going to take a little bit of time to see, you know, the effects of that. But what do you make of it?
Saw it last night.
Well, yeah. I mean,
all that data was pretty good.
Yeah, I mean, it's the spaghetti against the wall. Some of it's sticking, right?
Yeah, pretty much. Well, or they've got some new supplies of Tipex in to adjust their numbers.
Yeah. Well, yeah, there you go. And Kman, you made a great point. The US dollar CNH, very little reaction. I mean, we came down, bounced right off of that broken trend line that we were taken out yesterday, that triangle. It broke back. I mean, it's holding up. Is that a little surprising to you?
Well, I mean, it's yes and no. There's still these developers, housing developers problems going on. The PBOC is still injecting liquidity. That de facto keeps probably a lid on it. But yeah, I'm a little surprised it only lasted for like 15-20 minutes. And I reckon the Aussie is only partially supported by this. I think it's more a fact. I think there's been some Chinese Australia relaxation of some stuff, and then Bullock, the new RBA governor, is finally showing her true colors, and she's more hawkish than Lowe was. We have suspected that, but then she did not really give us that much over the RBA meeting itself. But now she's talking a little more hawkish. Because if you say if you don't support the CNY or CNH with those numbers, I don't see why Aussie should be really supported on the back of it either. I think we have to look at it maybe somewhere else. You know, somewhere the far from my bed show with the war. Perhaps one of those currencies where people say like, oh, okay, all the troubles are very far away from the Aussie. Maybe we could put 2-3% of our money there.
That's a great point. Being far away from your bed. And that is a good point. And the Aussie actually has held up pretty well. And, you know, following the meeting minutes that we got, 2 days ago, you know, when New Zealand CPI came in way below expectations. And then, you know, the RBA minutes were like, well, they actually did talk about a potential hike, and even though they kept rates unchanged, this is to be noted. And the Aussie is holding up fairly well in this environment. But thank you, Kman, for those comments. Real quick, I wanted to ask you guys also. We have Fed speakers today. We have Waller, we got Williams, we got Bowman, we got Harker, we have Cook, we have.
Wow.
I know it's like obviously we're not in the quiet period right now, so everybody's out.
No, this is.
this is it. This is
as quiet as it gets.
Do you know what the good thing is about all those speakers?
What's that?
They're after clock off time here in Europe.
Ah, there you go. That's right. Yeah, and plus you guys. By the way, great win yesterday for England. Anyway, back to the markets. Looking at the dollar, we were just talking about the dollar being a little bit corrective here, and this is kind of the way I'm viewing the dollar index, just like a slight descending channel, but we're still in breakout territory. And that's one thing that I want to try to be respectful of where the dollar's at. And I think while we're trading above this 106, 105.85, you have to be cautious about being short. I know the dollar hasn't responded too well, but I also think that the market is a little edgy. No one wants to really buy a bunch of dollars right now, not knowing that there's going to be some massive ground war offensive in Gaza, from Israel, because I think Israel's a little hesitant about pulling the trigger there, for obvious repercussions. And at the same time, no one wants to really be short the dollar either, knowing that it's that it's maybe just consolidating a recent gain too. So I think the dollar is just kind of waiting for data, waiting for action out of the Middle East. And going back to your original statement, Ryan, the market, the FX market is pretty quiet right now because we're waiting on cues. We're waiting for the reason. And Kman, you said it perfectly as a retail trader, but I think you could actually say this as an institutional trader at this stage in the game. No one wants to be, I say institutional from like maybe a fund, like a hedge fund institution, not official,
not a mental institution.
A mental institute. No one. It is a tough call right now whether you want to be super long dollars or super short dollars. But to be too positioned one way or the other still doesn't make sense to me. I've felt this over the last 2 weeks, and I've been pretty explicit in saying that I'm very non-committal as far as the dollar goes at this point, and I think the market probably sees it too. That's why we're just consolidating right now. And I love it when I'm really, really bullish or really, really bearish, but I'm really not there. What's else is interesting? I want to point out, the dollar Canadian is bid up today off of some good trendline support. If you guys watch that here, you saw yesterday after the CPI data, dollar CAD ripped right to 137.06, which is, by the way, the 618 retracement, which we're all very well aware of. We talked about it yesterday on this show. It did reject, and it came off quite aggressively. But even with the dollar just kind of stationary, you can see how it's weakening as crude oil is weakening this morning. So just a little heads up. I think we're forming some sort of wedge here in the dollar Canadian. We do have housing data. We have building permits coming out today. Housing starts, expecting a little bit of bounce back in housing starts. And I think the housing market is still kind of frozen in time here in the U.S. I was just talking to a bunch of realtors this weekend. I was at a event, and I was talking to a bunch of people that are in the real estate market, and they're like, market's surprisingly picking up right now here locally, and we're in a hot real estate market. Do we tend to be?
Valley National Bank came out and said they're expecting a 20% decline. That's a big bank there in Arizona.
Yeah, Valley National is a big local bank. Yeah, and but they were just talking about recent transactions have picked up quite a bit. Like people are just buckling at the idea that they have to buy people have to move, right? So you can only stay stationary for so long before people start getting aggressive. Like, I have to buy a house. I'm moving into town, or, I'm change jobs, or whatever the case may be. Anyway, I just thought I would note that. I don't think the real estate market's going anywhere here right now, but I wouldn't be surprised if prices start falling sometime soon. Anyway, but we're looking for housing starts and building permits, different than house price index or transactions for today. What are you guys looking for as far as the economic data? We have the beige book a little bit later. We have Netflix, and I should probably look at it really quick. Here's Tesla, just to get a look at how consolidative the market is in Tesla. This looks like a breakout waiting to happen, and it probably will be today. That would be my assumption, is Tesla is going to make a move today, and it's going to be a big one. I would be looking at option pricing on Tesla right now. And then we also have Netflix, that has just been dribbling lower. Do you buy it here? I don't know. I think we're probably at some support, but I don't know if I'd be a buyer here. But if we break, it's probably going to be a pretty clean and ugly break. So
is that one of the Magnificent Seven?
I don't know if it qualifies. I'm not sure.
Yeah, I don't know who the seven are. I thought.
I'm not. Maybe it's the grade 8. Maybe if it's a grade 8, you throw on Netflix. I'm not sure.
I think a few of the Magnificent Seven are already on Boot Hill.
What's that?
I think a few of them are already buried on Boot Hill.
Yeah, probably.
Did you see the movie?
Of what?
Magnificent Seven.
Yes. The new one or the remake?
Oh, okay. Probably. I didn't know there was a remake.
There was a remake.
Always the old one. It's always the old one, Blake.
There was a remake. No, I didn't see the original. Anyway, hey, so Ryan, what are you thinking today? What's front on your what's on your front burner today?
What are you having for breakfast?
Breakfast, God, nearly dinner time. I'm going to be looking at these housing numbers, because we've had Harker. You mentioned him. He's spoken about 8 times in the last 2 days already. But he's been banging on about the housing market maybe facing some difficulties. We saw that yesterday with the NHAB data going backwards again. So we get the tier 1 housing data for September starts and permits, and we'll see if there's any wobbles coming from that, and that's going to put the old soft landing rhetoric to the test.
All right. Well, we'll and any particular pairs that you're looking at to take advantage of?
Well, I'm still long euro dollar and waiting to see if it can break this 106 level.
By the way, that's huge resistance. It's channel resistance. It's previous support 106, 106.30. It's all big. If we break that, that would be my first indication that the dollar is going to really crumble here. So
yeah.
Kman, what are your thoughts? I know we got just a minute or so.
Yeah, I'm looking at the same stuff. Still from the other side, I'm rather selling the rallies in euro dollar, but then I'm buying back on dips as I've been doing for a while. I've got one on my radar, and it's dollar rand, because that stopped following the gold move. It did come down on the move lower on the move higher, gold. But now, if you look at that, or just around 1869.70 there, it's stopped going down. So I've initiated small there, also taking a bit off when it goes up. But I kind of like catching a knife in that one.
Okay, all right, and just what I'm looking at, guys, I picked up some dollar CAD, but I think that we are going to be threatening this channel resistance again around the 137.50. That's going to be a big one for me, and it's one of those that I think it's been hesitant because of its really strong correlation to crude oil. But if this market goes tits up, I think the dollar CAD's going to rip higher. It's going to forget what crude's doing, and we're going to be seeing 137.50 if not higher prices in the dollar CAD. So we're about let's see, we are just a few seconds. Hold on, guys. Sorry, I'm going to get over to the dollar here. Let me put it on a 15-minute chart. And why are my yields are so jacked up today? I don't know, but I'm going to pick. Oh, damn it. I'm not going to be able to do it in time.
There you
Here
go.
we
A
go.
little bit. Well, building permits up, housing
Yep.
starts down. Only small moves, small changes. Nothing. Nothing to see here, folks.
No, all right. Move along. Remember,
along.
we have and that data just came out via data flash. You can see it right here. So yeah, yields. And by the way, this one last thing, then I'm gonna pass it over to Dale here, and then I have to mention, guys, gals, make sure you're here on Friday. We're adding a new team member to the ForexAnalytix team, which will be here. We'll introduce that person on Friday after F.A.C.E. So make sure that you're here to meet this new individual. And I do want to point out really quick on yields, though.
Is it Kathy Wood?
It is Kathy Wood. I love her. She's my favorite. But look at the move in the 10-year. 5-year hit new trend highs. 2-year was hitting new trend highs yesterday. I mean, 30 and the long end isn't quite there yet. We're still struggling, but the lower end, I mean, you gotta watch these yields, man. And if you think there's something that could take up the dollar higher, it might be this move in yield. So just keep your eye on the bond market. Obviously, that's one eye should be there every day anyway. So Dale, I want to thank you for being with us and guiding us through the markets. And I think that was a great idea about silver today, and pulling some profits here at the 200 DMA. I think that's pretty smart. And thank you, Ryan and Kman. Make sure you guys and gals are tuned in to see Ryan and Kman on the Flow Show. It's our early morning European show. So if you're awake during those hours, make sure you're logged in there. So Dale, it's all yours.
Thank you, team. Ryan, thank you, buddy. Hey,
Cheers,
man, Mr. Positive, and Blake, thank you. And guys, before you go, I was just thinking about it, Blake, with you bringing up yields and what's happening. And in 87, yields kept going up and up and up, and it didn't break the market. The only difference was the dollar was falling at that time rather than, rising in general like it is now. But the interest rate, the disintermediation between say, overvalued tech and what's happening with yields is really, dramatic. And I remember guys that were writing bond calls back then, and they said, Dale, it's like picking up dollars off the sidewalk. Every day they'd come in, they'd sell bond calls. And the one day when the market finally gave out, took them into huge deficits because they were writing. They had unlimited risk. Anyway, what's happening with yields just kind of reminds me of that environment that,
what was tech of the 80s?
IBM.
Energy, right? Energy. Wasn't it energy?
That
was
energy,
the equivalent.
Yeah.
That was the equivalent.
Yeah. Well, yeah, I mean, there was tech. So, there was Intel, there was Oracle.
But what moved like tech was energy at that time, because of the oil shocks and everything else, right?
87, I don't know if it was an oil shock. It was an interest rate shock.
Oh, right here. Okay, right here. This is the one you're discussing. I thought you were talking about the early 80s. I'm sorry. So right here, there's yields right there. This is what you were talking about.
Okay. Yeah.
Interesting.
Back to anyway. Thanks, guys.
Cheers, mate.
Cheers.
Cheers, Dale.
Thank you, guys. Hi, Andrew. Thanks for listening to me blather for a few minutes.
How's it going,
buddy.
Dale? Thanks for having me on.
All right, great to have you, Andrew. What's top of mind for you? I was checking your stream out, and you talked about the massive candle that we put in Bitcoin. You think that's an important one? And what do you think of the market here in the middle of a new theater of war on planet Earth?
Yeah, there's so many things to unpack there. This is such a wild environment. I'm going to go ahead and share my screen if that's all right.
Yes, of course.
Yes, let's go ahead and we will share. And yeah, here's what I'm looking at, like at a very high level. I think what's happening is, if we just go to the equities first, the S&P
Yeah.
500.
Yeah.
Basically, as you know, for the past 2 years, we've had this big inflation spike, and the market went through a pretty severe bear market, and it's been trying to climb out of that bear market. And for a while, things were going very well. We had declining inflation, and the CPI just kept printing new and new lows.
Yeah.
And we got that nice rebound in growth. We got that nice rebound, in the Magnificent Seven specifically. This right here is a chart of that Magnificent Seven year to date versus the rest of the market. And you can see almost 10x the performance of the market from that Magnificent Seven. So it's been a very uneven rally that we've seen. But now I think go ahead.
Narrow?
Very narrow rally. And how long can that persist? I think the issue that we're now running into is we've had a balance in inflation where for the past 2 months, the year-over-year figures have been increasing. And what makes this a really tough situation is I'm looking at things like this Trueflation dashboard. This thing is a really good indicator for where those inflation reports are going to come in.
Cool. Free site?
Yep, this is a free site.
Okay, write it down, guys.
Yeah, Trueflation. This thing is really good. The CPI reports we're only getting once a month. This thing updates every single day with a real-time feed.
Wow.
And so, you can, and look at this thing. It was up at 9%. And lo and behold, we've had this really nice dramatic fall. But you can see we've been basing out for maybe the past 2 or 3 months. So overall, I would say this inflation picture is looking a lot better than where it was maybe like a year or two ago. But the problem now, right as it looked like we were about to ignite on this end of year rally, we're getting these geopolitical tensions. And, with those, if we suddenly get a spike in, let's go to like DBC, this is our commodities ETF.
Yeah.
We don't want to see commodities ripping to the upside like they are. This is not good. Same thing with crude oil as well. We're seeing that now ripping to the upside. So these are basically headwinds that I'm seeing for the rally. Everything looked really good, but unfortunately, it seems like we are now basically at the mercy of these developments that are happening in the Middle East. If those end up souring and we get a dislocation in the energy market, then suddenly our bond yields are moving higher again and equities are moving lower. So it's a challenging environment. This right here is our snippet of the yield curve. And you can see these are US Treasuries. And this gray line is where everything was 3 months ago. And then we have 1 month ago. And then this blue line is where things are as of the close yesterday. And this has been a really dramatic move. If you look at, this 20-year Treasury or even the 10-year, very dramatic in the past couple months.
Really, a full basis point.
Exactly. So full, really big move higher. And for whatever reason, what I am noticing is the market is somehow hanging in there, even though we've had this big pop in yields. And even though we're getting these geopolitical tensions, things are still hanging in there. I mean, we look at these Treasury futures, these things look absolutely horrible, and the equities are hanging in. So
that's what they did in 87. That's why I was saying that. You had, it's called disintermediation.
Yep.
So, and, it took finally the market caving and the bonds came out of the hole like ripped the shorts faces off. So that's what it would take. The only difference was we had a weak dollar into that. So rates were going up, weak dollar really wasn't supporting it. So we have the opposite, strong dollar. So I don't know if that's why you get a different result, but just the differentials between yields and valuations are historic.
Oh yeah. Yeah, and you can see like this run the dollars had is just insane.
Yeah.
So yeah, and
12
this is
weeks up in a row.
mm-hmm.
Till last week, it gave a little up.
Yeah, so I think we need to see some relief on the inflation front. I mean, last week when we got those inflation prints, they came out super hot.
Yeah.
And, I thought, hey, maybe this is it. Bond yields are really going to go to the roof and equities might end up cratering, but things remain okay. So like what I've been using as my North Star is this chart right here. It's very, very simple, but check this out.
Oh, yeah,
It's
I
very
saw that.
simple chart of
Yeah.
the SPY ETF, which is the S&P 500.
Right.
We have some really nice clean levels to trade off of here. Back in April, and this was as we were coming out of that banking crisis,
Right.
we had this really nice 2-month
4,200
basing
breakout.
period. What was that?
42. 420 was where we had the breakout and we got parabolic. And 420
Exactly.
is what we've tested. Do you think that 420 is the low?
I believe it is the low.
Okay.
Yeah, so that's my baseline assumption. We have this really nice price structure here. And, we had many reasons to cascade below back in April, May, and June as well. And the market ended up having this beautiful breakout. But then as inflation resurged, we've gotten this pretty big corrective sequence. But it's very interesting. The market made its low pretty much right at the top of this 2-month basing period. So I like this structure here. And I'm pretty much using this as like my line in the sand. Hey, if we're above this wick from September 27th, I'm being more constructive on equities. And if we were to fall below it and start cascading back into this base, it could certainly happen because we don't know what's going to happen in the Middle East. That's really what I'm watching out for. And that's how I'm approaching the market. Because I think with this Middle East conflict, like I've been reading up, the past week or so, like everyone else, but I'm not like killing myself trying to predict everything that's going to happen in the Middle East. And, I think that's kind of a fool's game. So I think it's just important, at least for me and my trading specifically, like, okay, things could get really bad or they could, go perfectly. So where are my lines in the sand and where would I get more or less constructive on the market? And right now I'm seeing like everything looks so bad, but we're just kind of building out this little sideways base up here.
Okay. So constructive the market. Do you think all new highs for the move, new all-time highs by year end? Are you in that camp?
No, I'm not in that camp. So for me,
Okay.
like the way that I'm seeing this is like we're already in October, we're in the late innings of this year.
Uh-huh.
And a lot of times there's this big seasonal correction that occurs in the fall. In the late fall, there's a lot of tax loss harvesting. And again, because most equities have been so darn weak this year and the breadth has been horrible, like I would imagine there's a lot of tax loss harvesting that's going on this year. But as we get to the end of October, a lot of investors, they just kind of go on vacation. A lot of them are out of the office, etc., holidays. And I just think that barring any big escalation, I think, market likely just kind of grinds higher into the end of the year. But
You know what? A lot of people are saying that, okay?
Yeah.
Bar any escalation. Can you give me a reason why there won't be?
No, I can't. That's
all right. So, forget about saying barring. Start thinking about how you're going to protect yourself as things escalate.
Yeah.
And that's my view. Okay.
Yeah.
Look, there hasn't been peace there in millennia. Okay. So you think Biden's going to fix it? Or the Saudis? Or the Syrians? Or the Lebanese? Or the Israelis are just going to lay down and say, okay, peace? I don't know, buddy. People say, as long as things don't get worse in the Middle East, how can't they? Please give me some hope.
Yeah, I mean,
Have any?
like I said earlier, I can't predict what's going to happen in the Middle East.
Right.
And I think there's a lot of
I can.
emotions around what's going on. Like it's pretty catastrophic, to be honest.
Exactly.
So for me, like one thing that's actually been helping me with my trading is like for a lot of these big geopolitical events, I'll tune in and I'll start being glued to the screen and really like reading every news headline. I've noticed in the past, for me specifically, it's actually kind of like interfered with my trading a bit. So for this conflict, like I'm basically going in saying, hey, my chance of predicting the outcome here is 0. I'm going to accept that I can't. And I'm keeping up to date on the headlines, the big events. I have my
Trade your
news wire up.
charts.
Yeah, but I'm just kind of looking at the charts.
Yeah.
So
Your hedge is your line in the sand. So, if it does get worse, you'll be out under 420.
yeah,
Would you get short if it took out 420?
to be honest, I don't think so. I think I would just get flat.
Okay,
that's
good.
Yeah,
That's a position too.
Yeah, I was shorting the market up here, like towards the end of the summertime. I was getting really aggressive. Even the last time that we chatted, I was bringing up a lot of the risks in the market, some of our indicators that were flashing. So I think there was like a good short case to be made somewhere towards the end of the summer. Of course, then the market corrected. I certainly didn't catch all this move to the downside, but I caught a little piece towards the top, which was good. At these levels, like say in this little chop zone, I haven't been doing anything in this chop zone. So like I haven't placed a trade maybe in the last like 5 days. I put on some positions this specific day right here on this wick low. I saw that, hey, the market's just cascading to new lows. The market was very weak intraday. And then we finally saw that buying pressure. So I put on a couple of pilot positions in this area right here. I went underwater on them for a few days, but I'm just kind of holding some positions that I put on right around here. And in this chop zone, I feel like, for maybe the past 5 days, it would be so hard for me to initiate, like, let's say like new shorts, and suddenly there's a good headline and boom, this thing's ripping to the upside. And then on the reverse, like if I'm putting on new longs and then, the headlines that we got yesterday with that hospital blow up, I wouldn't really feel comfortable adding longs here either.
Okay, I think we've covered this. Don't you? What about gold? What do you think?
Let's take a look at
we had there.
Yeah, gold looks very, very interesting here. Let's take a look. So one thing I'm looking at for gold, I'll go over back to this view right here, is the monthly chart. Monthly for gold looks fantastic. Check this out. So we had, again, this really nice move on the geopolitical news. This monthly is really shaping up.
Yeah.
I like the way that this one looks. So this is definitely a chart that I'm very interested in. I have no position on my trading account for gold right now, but this is definitely something that's on my focus list, on my watch list. The trouble is gold has had so many fake outs. I've actually tried to trade this move a couple times to the upside and I've been stopped out every time. So this is one that definitely watching. If we can get some consolidation or tight price action here, I'd probably be more interested in actually adding a position in gold. Like, see this action right here? Back here in December, we started getting this really tight action. And then we ended up getting that springboard to new highs right over here. I missed this move in gold. I missed this tight action. To me, this actually is a miss because this is a really good trading setup here as it gets tight. This is what I would be looking for to get long gold again. This right here, after gapping so many times, would be really tough for me to initiate a position. I think the odds of getting stopped are pretty high, but the chart looks awesome. And I would like to get a position on. Do you currently have a position in gold, Dale?
Yeah, physical and some shares.
Oh, nice.
But a third. It surprised me, this rally. Because we had confirmed lows. I'm waiting for weakness.
Okay. Yeah, it seems like that's kind of like the move in gold. Like if you try to buy into the strength, a lot of times, then the volatility spike comes. So yeah, like look at this gap. This thing is pretty huge. If we were to get a gap fill of this, perhaps I'd be interested. But yeah, with this conflict, who knows? Maybe gold just zips higher. And
You
then
have a view. You have a view on. Yesterday was pretty negative day. I know. I think even saw a tweet on NVIDIA.
oh
in your
yeah,
stream.
Nvidia. Yeah, Nvidia.
Does that blend in with your bullish outlook on the market if NVIDIA is forming a head and shoulders top here?
Yeah, this is a big knock on the market because the best group so far this year, the XLK Mega Cap Tech, IGV Software Group, and then just the NASDAQ QQQ. And this really is the ringleader of that whole movement. So yeah, we got that bad news, the export bans of some of the NVIDIA products. And this one had a pretty bad day. So I think NVIDIA is a very, very important chart to watch. We have this wide base right here. But yeah, if we end up breaking that base and start moving to the downside, I don't really think there are other stocks that can hold up the S&P 500 the way that this one does.
Okay.
So I would imagine if I end up getting stopped out on some of my longs, it probably is because NVIDIA takes a turn for the worst. So this is definitely one of those, cautionary tales. Definitely worth watching this chart because this thing is not looking as strong as it used to.
No. All
So, yeah,
right. Let's see, Andrew.
we can go through the Bitcoin chart as well if you'd like.
Andrew, Forex Stop Hunter is the world leader in 3 drives. I can't express how much more profitable I became by mentoring with him. Oh, thank you. Bitcoin, are you a believer? We can take out the wick from the other day.
Yeah, Bitcoin. I have a long-term position in Bitcoin. I have some from 23,000, and then I actually just added at 26,000 in Bitcoin as well. So this is when I'm definitely a long-term believer in Bitcoin. And I think, to be honest, like some of these assets, like even like growth stocks or technology, Bitcoin, etc., probably the worst environment for these assets is an environment where the Fed's hiking interest rates and the Fed is reducing their balance sheet. So I think over the past 2 years, like opposite of ideal conditions for this asset. And we're seeing that this one as well, it's basing out sideways. And I think there could be some good news in the future. The GBTC ETF is very likely to get approved. And the way that I'm measuring that likelihood of approval is I'm looking at this GBTC premium and discount to NAV. Let's check this out. We pull up GBTC. And we pull up this discounter.
Do you think if the S&P, the SPY took out 420, it would pressure Bitcoin and everything?
Absolutely. Yeah, these all move together. And Bitcoin is such a high beta asset. I'd imagine Bitcoin would be down much more than the indices.
Okay. Because it really didn't do much to the upside during the period of strength last week before, until we had that news about, and then it was sold into. So I'm just.
Yeah. So there was like a kerfuffle there where there was some news that potentially was not actual news with a BlackRock ETF approval.
Yeah.
Here's what I'm looking at.
Yeah, you have the goals up there.
Yeah, so if we go to like BITO divided by SPY, let me pull up this ratio chart. This I find very interesting. Bitcoin has been pretty relatively weak all year.
Yeah.
Well, it's had a pretty good year-to-date performance, but as you mentioned, it's had some periods of relative weakness. This is the BITO versus the SPY. And since September, when the market's done essentially like a whole lot of nothing, this relative chart, you can see Bitcoin is actually starting to move higher. So beginning in fall, we're starting to see some relative strength in Bitcoin.
Okay.
So this is one, it's more of like a long-term position for me. And yeah, we'll see what happens. It's almost like a gold proxy in my eyes. Trade's a little bit different, but yeah, I really like the future for Bitcoin. And this is something I'm really thinking of holding on to for maybe like 5 or 10 years. I think at some point that money printer will end up turning back on. Interest rates will move lower, and I just want to have a core position in this
So
for if that happens.
it's a dollar hedge for you.
Exactly. Yeah.
Okay. All right.
Exactly.
Well, interesting presentation once again, Andrew. Best way for people to, follow you at Real Pristine Capital. Is that Cap?
Yep. Yeah.
Your
So we
Twitter
have our
handle?
exactly. So we've got our Twitter right over here, and then beyond Twitter, we also have our Substack over here, which is pristinecapital.substack.com.
Why do people go to Substack to do their stuff, their analysis? Is there just the ease of getting it set up, or because I see more and more people around Substack? Why did you?
Yeah, Substack, Twitter is great for like short form, off the top of the head thoughts, if you want to
Right.
put a chart out there, etc.
Yeah.
Substack is good for like if you really want to put out like a research piece or like long form content.
Got it.
So yeah, it's a good platform, very easy to get set up as well. So yeah, I really enjoy it. I put out, basically market thoughts every single night. I put out a research piece, and then I also put out like a weekend video as well. So there's a lot of good stuff.
Okay. So my trading warrior brother, Andrew O'Connell, everyone. Thank you
Thanks so
very
much,
much,
Dale.
And yeah, thanks for being here, buddy, and putting up with my irritability. I'm just, this war has me upset. So,
Oh yeah.
yeah, I'm trading to distraction, and partly sometimes I go, what's the point?
Yep.
Anyway, let's make money and do our best to guide people from not making the big mistake in this environment. Okay, bro.
Exactly. Make
All
money,
right.
stay safe. Have a good one.
You too, buddy. Thank you, Andrew. So follow Andrew. He's got, thoughtful guy and pretty calm demeanor. That's important. Unlike me. Anyway, you could join the team in about 18 minutes on the Morning Edge. And who am I wrapping it up with tomorrow? And Thursday, I know we're introducing. Oh, Mama Investor, Kim. Kim's great. So we'll be talking to her. See you guys in the room. Take it easy. Don't just count your pips, count your blessings. See you, Laura, Jamie. Take it